कुछ लोग तो कह रहे हैं कि आज की इस हैट्रिक ने 24 की हैट्रिक की गारंटी दे दी है।
Well, looking at the market reaction this morning, the GIFT Nifty, the way it's bumping up in trade, it seems like the markets are already pricing in a 2024 victory.
See, Aisha, in the run-up to the election, historically, markets have always run up. And that's the historical data. The historical data has always endorsed that in the run-up to the election, whether it is 2019, 2014, or even beyond that, markets, they tend to rally. I think that is something which is on our side, and that is how markets have moved prior to the election, 2019, 2024, 2019. So, like they say that history may not repeat itself, but it certainly rhymes, and looks like this time it's no different. But the difference what may actually happen post the state election verdict is, first let's understand what it means. It clearly means that this is an endorsement by the voter for continuity, and it is also an endorsement for what the A, continuity in states where BJP has come back to power, and B, endorsement by the voter in states where BJP manifesto in a sense has gone down very well. So from a real voter standpoint, this is just an endorsement of the policy of the current administration, even at the state level. Now from a market standpoint, well, the general view post the exit poll on Friday was that it would not be a hat trick for BJP. At best, it could be a two out of 4 states. But since it's a hat trick, that is something which markets now would like to start pricing in. And that is what you're seeing on the screen right now. We are in for a rip-roaring Monday.
And it's been a clean sweep, it's not like it's a neck and neck, tough kind of fight. It's been by a landslide margin.
Yeah, landslide margin. And so Aisha, you have to also, look at where the market setup is.
Yeah.
Now, in the run-up to the state election also, irrespective of the state election, markets had hit an all-time high. And that was nothing to do with local cues. It was always a global rally, which in a sense was at play at least in the month of November. Starting from US equities to the kind of rally we've seen in Bitcoin, the comeback in gold and silver. So it was a rising tide phenomenon, which in a sense has been at play from last 4 to 5 weeks. Now, are we likely to differentiate ourselves? And I think we will differentiate ourselves because of the local tailwind and post the state election. So are we in for a bout of outperformance at a time when globally as it is markets are looking strong? So it really could be a twin engine benefit. The market, globally there is a strong tailwind. B, locally there is a propeller effect which would kick in. So I think it's going to be a twin gain for the market per se. What you may actually see, Aisha, is that you see decisive move coming into large cap stocks. Yeah. That's what you want.
Yeah.
Yeah, and as you said, it's been a pretty strong move already. Just to put things into perspective, how we've shaped up prior to this outcome is that most of the indices are at their all-time highs. Every single trading day of the last week, we saw the markets gain. All sectors wrapped up in the green. The FIIs as well have been consistently starting to buy. A lot of the Nifty stocks as well, close to 94%, are trading above their 200 daily moving average. And this year, while the frontline index has gained about 12%, it's been the broader markets that have really stolen the show, with the small cap index notching up a solid 41% gain and the mid cap index up about 36%. And the fact that, Nikunj, those underperformers as well within the frontliners, the HDFC banks, ITCs, Reliance Industries of the world, once they play catch up, that will add a further bazooka as well.
I see three group of stocks doing well. One, over FI dominated financials and large cap stocks. If you are a foreign institutional investor, it's obvious that now you have no choice but to throw your ring in the hat, so to speak, because looking at the state election verdict, I guess the risk factor which everyone had for 2024, obviously that will get marginalized. So for an outside investor who's been selling into India, the choice is that looking at the construct of the economy, the bent of the economy, by force you will be forced to make a comeback. Second, I think a deep swell in defense and railways and some of the PSU stocks is coming. It may not be in PSU banks, but defense and railways. Some of these stocks have seen a sizable correction from the recent high. So move in policy-dominated stocks, especially policy-dominated stocks by the center, defense and railways, and perhaps power. That theme could make a comeback. And third, any guesses? I think Adani Group of stocks.
Okay, yeah.
I think Adani Group of stocks obviously could make a comeback. So these are the three things I see the market moving. One, large cap stocks which are moved into hibernation, which are FI dominated, they will make a comeback. If you're an outsider, you would say, okay, do I come now after May 2024 15% higher, or do I chance my arm now?
Yeah.
Because ultimately you want to be in India, looking at the construct of the economy and looking at what is happening in the world. You've been selling. Too bad. You'll be forced to come back at higher levels, or you can come back now. So I think that decisive turn will come now if you're a foreign investor. B, PSU stocks, I think they've corrected enough, especially policy-dominated stocks. That's second. And third would be Adani Group of stocks. And the interesting dark horse in my book now actually would be OMCs. Because considering that more and more states are now with BJP in terms of the policy framework, and especially when it comes to excise duty and other local, state factors in some of the oil marketing companies, could that be in sync with what the central mood point is? I think that is one group which could see re-rating going forward.
Yeah, and that group has already begun its move. In fact, no, not just this year, but if you just look at the month-to-date data, that already is indicating a phenomenal uptick. But I think, it's great that when you flagged off these large cap stocks which are away from the life highs, and given their percentage weightage and bearing on the Nifty, a move in these is, we're looking at not just 21K, but even beyond. HDFC Bank is 13% away from its life high and a 13% weightage on the index. Reliance, 9% weightage, 9% away from its all-time high. ICICI Bank, 7.5% weightage on the index. So these are big boys we're talking about, and a meaningful move in the markets if they were to make a comeback.
Yeah, and market has not seen a meaningful move.
Yeah.
On last count, I checked, I think on Thursday evening, I've not looked at Friday's data. The YTD change for Nifty is just in double digit, barely just above 10-11%. And the Bank Nifty has actually given no return. So frankly, you can look at the market from the prism of small and mid-cap stocks and say, okay, there is a bubble and there is a trouble and there is excitement happening in the IPO market. But Nifty is giving you just 12% return versus small cap and versus mid-cap. So even if large cap stocks, they rally in a substantial quantum here, it will not be called as a bubble or a trouble. You have to understand that they are still cheap and they've actually not participated. So are we at that turn where suddenly the influx of flows will move back into large cap stocks? Because if you're an institutional investor, you may just derive comfort and you may be having this entire FOMO effect. So I think FOMO is the right word which actually could be at play when it comes to institutional investors. Swaminathan Iyer, consulting editor with ET Now. He joins us now. What a pleasure and always delight to have him on ET Now. Good morning, sir. Is it late night for you? Have we bothered you really late in your time zone?
No, it's only 9:30 at night right now.
Okay, that's not bad. That's not bad actually.
Yes,
well,
yes.
It is looks like it's going to be a new sunrise. Looking at how things have moved post the state election, there is no late night there.
Yes, I would say that global investors are not particularly interested in the state elections. They look at the larger picture. I think they've already assumed that Mr. Modi is going to win in 2024. This is some confirmation of what they were going to do, but I don't think it changes their view that Modi is going to win in 2024. And whether he wins by another 10 votes or another 10 less votes, I don't think is the key thing. But yes, the markets like continuity. Particularly, I think they would have been worried if there was a Congress sweep. Then I think something like the Adani shares might have had a question mark against them because of certain fears. But as it happens, so there's continuity. It has to be said that the FIIs have not been all that keen on India. It's not that money has poured into India the whole year. But the global outlook as such appears to be not as bad as earlier thought. The US economy appears to have had a soft landing. They raised the interest rates, and yet they have brought down inflation without having a recession. Quite rare. Doesn't happen very often. But the US economy, having achieved a soft landing, it's roaring ahead with unemployment as low as 3.9%. In those conditions, I think they will begin to have a more upbeat thing on the whole world economy, where, of course, India is now seen as a new kind of locomotive taking the place of China. Still not comparable to what China used to be, but I would certainly expect significant flows to be coming in 2024. However, as far as FDI is concerned, we still don't see a huge inflow. I don't think the foreign investors are that keen on PLI on those particular areas. You have Tesla, which is desperately trying to negotiate special conditions. I frankly see no reason why Tesla should be given any concessions, because when the Ford and General Motors and the others came in, they did not get special concessions. So why should one particular car company be given these concessions? So, but I think Tesla will definitely one way or other come into India because it needs India more than we need Tesla. It will come. So there will be FDI, but I wouldn't put a bet on, for instance, a big new silicon fabrication plant coming up in 2024. I think on some of those issues, the foreign investors are still waiting and seeing. But yes, overall, India is a good long-term bet.
Right. And, Swami, I think the policy continuity, what's happening on ground, whether FDI participation comes back, whether FIIs come back or not, just domestically, the market is going to be charged up, be it what's happening on ground with infrastructure, construction, all the development around India's work on renewable energy, etc. That momentum in itself is good enough.
Yeah, I would say from the point of view of, I can understand Indian investors getting a little more charged up with this, but the foreign investors have already built in the notion that Modi is getting re-elected in 2024. That being the case, they don't really see that the state election would have changed things very much. Even if the BJP had done somewhat worse and lost a state or two, I don't think for a minute they believe that Modi will not return very, very solidly. That's why I thought that, foreign markets may not get charged up by this news. It's already built into their expectations.
Swami sir, if one has to really look at the trends in the state election, there have been instances, let's say in the past, where the state election wording is not sync with what the central election cycle is. But do you think this time it is different, because the mandate is so overwhelming and the mandate is so clear that looks like we already know what will happen in 2024 now?
I would say that in the past, when you find that, in the December elections, you have one result, and in the general election, you have a different result. In those cases, there was discontent. So what you actually were seeing was an anti-incumbency trend. The incumbents were beaten in the state election. And because there was another party in power, like Vajpayee, the anti-incumbency hit the central government also. You have to think at this point of time, whatever you saw, was it an anti-incumbent vote? And if you look at the results in Madhya Pradesh, where the BJP had a huge increased majority, you cannot say that anti-incumbency is the general story. Yes, it was there in 3 other states. Not a general story, because Madhya Pradesh did very well. So in these conditions, when anti-incumbency is not a strong trend, I would not expect that to affect the central election. I think most people expect the BJP to be returned with a smaller majority. I think that would still be the overall kind of consensus.
I wanted to understand your take as well now with this outcome, in terms of the fact that we've already seen some populist measures announced. Do you see potentially some more coming in the run-up to May? And how are you seeing this impacting the overall fiscal consolidation?
No, I would say that the important thing that has happened is the global conditions. I would say the US soft landing is a very big positive for the markets. And once you get that optimism, it spreads. There was a considerable fear that 2023 is going to be a bad year. There were people who feared a hard landing and a recession in the USA. There were people who feared a lot of carnage in some European markets. The impact of Ukraine was unknown. It was a question mark. So I would say many of those things have gone. It's very clear the US had a successful soft landing. So when you see the conditions of, it looks like 4% GDP growth this year, which is far above what expectations used to be, with the prospect of continuing further. The labor market is red hot with 3.9% unemployment. And there has been a rise in wages, but it has not translated into high inflation, which is a very positive sign. So I would say these are the conditions that would drive the optimism of the markets. What's happened in India would be a small little stir. I mean, some India's specific funds may think, well, it's slightly better than before. But yet I would say they already have assumed, all of them have assumed continuity, all of them have assumed that Mr. Modi will be re-elected. That is why I don't think these state elections would make very much difference, especially when Mr. Modi has won quite well anyway. Had he lost very badly, they might have had second thoughts. That is not the case.
Sir, purely from a market standpoint, if I say that the real setup based on the outcome of the state election is following, that this time it's not going to be Kashmir, it is not going to be triple talaq, it's not going to be free toilet, it's not going to be free cylinder, it is going to be simple financial inclusion and economic growth. Do you think that is going to be the real core of 2024 BJP's positioning?
I hope so. I hope that is the case. You never know. I mean, nobody expected the incident of which led to the Balakot bombing. And that Balakot bombing, I think, added, according to my Economic Times polls, 7 percentage points to the BJP's popularity in 2019. I mean, it was such a boon that some people even speculated, was this a managed thing that happened? And will Modi try to manage a similar incident right now? I would say right now, there is no need to get into that kind of thing. There is no need to up the ante with Pakistan on the border on any of these issues. There is no need to up the ante on the Sikh Khalistani issue either, despite what we have seen in the USA and Canada. I think the BJP believes that its performance has been good and it can win on the basis of performance, while others may disagree that there was some communalism in the state elections. I would say basically no. Basically, it was an argument about development. And we saw this, I think, in the Uttar Pradesh election when we went out there. I attended many of those rallies of Modi, of Adityanath. There was no communal message going out. The whole thing was, have we not performed well enough to be re-elected? And the electorate said yes. I think the same thing has happened in the state elections. So I imagine that is going to be the approach of the BJP in the general election too.
Just curious as well to understand your take as to, what this means in terms of Congress, the new coalition as well, INDIA or India. How do you believe now, the leadership will likely continue over there?
Well, the fact that the Congress has won Telangana is a plus point for Rahul Gandhi without doubt. Now, I would say, last year he was called Pappu and nobody, people laughed. If you said the word Rahul Gandhi, there was a snigger. But after the Padyatra, after they have won in Uttarakhand, they have won in Karnataka, it is no longer just seen as useless Pappu who is incapable of doing anything. I remember within the Congress party, I heard the sniggers. Oh, na bahu lata hai, na bahumat lata. And this kind of joking was taking place openly. Now they are seen as a serious contender. So you can definitely say that they will be the leader of this INDIA. They will be the leader of this movement. Let us see how far they get. I don't think even they hope that they're going to win a majority. But if they can have a significant improvement in votes, they will say, okay, we are now well positioned and let us continue the fight. right now the ground is not particularly uh, good for us. But maybe in the future, you have no idea what happens. 1 year is a long time in politics, and maybe something will come out of the sky. So I would say yes, the opposition will be happy enough with the election and to say, let's consolidate behind the Congress party. There will be no question that the Congress party should be the leader.
Well, Swami sir, always a pleasure, and if I may add, a rare pleasure to have you on ET now. Certainly look forward to much more of you on the channel going forward, and your thoughts are something which everybody really looks forward to hear.
Certainly, and I will be back in India after the December. Let's see.
Well, let's see. Look forward to meet you then.
Yes, thank you.
You know, I think I was in school when I started reading pink papers, and that time Swami sir used to always have the big edit. So that's his experience.
Yeah.
50 years plus of experience. That's actually more than my age.
Yeah, so no one better really to track elections, India story and the outcome. But let's find out who's tracking technicals, and we have our chartists as always joining in. So there's Naresh Mirani, Kunal Bothra right here with us. And do you think that what's emerged in terms of the political outcome on Sunday is only going to provide more fuel to the markets, Kunal?
Good morning, Awan. Yes, of course, I think the HX Nifty itself is an indication of the kind of strong and emphatic opening from the GIFT Nifty rather is showing the kind of emphatic opening for itself. So I think 270 plus points for the index. We should be inching towards that 20,500 plus mark for the Nifty. I think now what matters is like what we've seen over the last few weeks, that the participation of large cap names, I think that's going to be the key for the markets to sustain this move. We've seen a phenomenal global support, I think, from the equities right towards bullions as well as the other risk asset classes, and I think that's supporting as well as fueling the market rally. So bullish on the indices, would maintain that stance even going forward.
The point is, Kunal, do you buy? I mean, there is, okay, 200 points GIFT Nifty up, you better be bullish. But the point is that do you buy at 20,600?
No. So I think on the post the event, after such a kind of a gap opening, it makes sense to start booking out maybe partial profits, maybe one fourth of
So you expect markets to go higher, but as a strategy, one should book profits.
You should book profits on your index, but you should start looking out for fresh stocks which are breaking out. Okay. I think that's going to be a much better strategy this time around.
Okay. Right. And Naresh, we were just culling out this long list of heavyweights which have actually underperformed so far this year. And I mean, everything from Reliance to HDFC Bank to ICICI Bank, they've significantly lagged what the mid and the small cap end has done. Given their weightage on the index, of course, if they were to begin participating, we're looking at way ahead of the levels that we're currently staring at. But what do you think on the likes of Reliance, ICICI Bank, HDFC Bank? Will they finally begin participating?
So taking it one by one. So first, if you look at ICICI Bank, the stock had earlier made a high of 960 back in 2021, 22-23. Tried a multiple attempts around those levels, could not cross and sustain about the 1,000 mark. But on the downside, it has not corrected sharply. So 900, 920 has held on for the last few months. Yesterday, on Friday, it was the first tick wherein it made a monthly high, crossed about the 950 mark. So first indications have come of a turnaround. And we could again go back, test 1,000 levels, and then we take it from there whether we can sustain about 1,000. So we have an upside on ICICI Bank has opened up. Similarly, if you look at HDFC Bank, the stock has been at the same prices for a period of last 3.5 years. But over the last 2 weeks, the stock has slowly recovered from that 1460, 1500 zone to 1560, making a 2-month high, and could now go and test the gap down, which we saw recently around that 1600, 1640 mark. So there is some upside over there also. So we have started seeing first indications across the board. Reliance also similarly has crossed 2350 and slowly heading towards that 2500 mark. So from here on, if we look at all the heavyweights, we do look like an upside of 3 to 5% on a minimum scale. And then we take it from there whether it can further catch momentum and cross major resistances. So for now, expecting a bounce across the whole heavyweight space.
Okay, let's find out the stock-specific strategies then, and what's looking like a good buying opportunity, Kunal, now.
So I'll go with a larger cap name, that's Tata Motors. The stock is heading towards a fresh breakout. It's already confirmed a breakout about that 700 mark. So expecting a further fuel in terms of momentum, 750 as a target for Tata Motors, which I'm eyeing over the very short term, stop loss at 675. And from the mid-cap arena, a stock which has already confirmed a breakout, but it's into a very strong momentum, is Exide Industries. The stock has done reasonably well. In fact, even on Friday's session, the stock came closer to that psychological as well as a 300 mark. So I'm betting on Exide Industries over the near term, expecting the stock to climb towards 312 over the near term, stop loss at 288.
Naresh, what stocks would you pick out to trade this morning?
So first is a buy on ICICI Bank, which has finally given a short-term breakout. Good enough base made at around 900, 920. And now setting up for a move back to the new 52-week highs and all-time highs. So a quick short-term target price of 1,000 levels, stop loss at 938. Second is a buy on Canfin Homes. We've seen a good breakout across the housing finance space. We saw that happen with LIC Housing. And on Friday, even Canfin Homes gave a breakout, which was almost a 4-month range, wherein 775 to 800 zone was the resistance. We've crossed about that 800 mark. Good volumes also. Expecting this to see a follow-up move towards 900 in the short term. Stop loss to be kept at 800.
Okay, on that note, we're going to take a very quick break. Looking forward to that big gap up move this morning. We'll have Sanjeev Bhasin join in after this break.
Welcome back. Let's connect with Nilesh Shah as well, who's joining in right now from Kotak AMC. Nilesh, good to have you on board. Do you think that this state election win by the BJP is really going to allay any concerns that there had been when it comes to political risks?
So market was already discounting political continuity, and the state election results will reconfirm that. More importantly, there are other good news also. The GDP number came ahead of expectation. Oil prices are relatively stable despite production cuts. Indian economy and India Inc. both seems to be well poised for future. So it's combination of everything which is giving confidence to the market.
Sure. Nilesh, but does it also mean advantage BJP in 2024 general elections? And do you think the market will now start positioning itself as a precursor to what may happen in 2024?
Undoubtedly, market was already discounting continuity of government, and this reconfirmation gives added confidence to the market. Market will also be thinking that in the next term, there will be even bigger and bolder reforms. Reforms which will change the orbit of India's growth. Reforms which will ensure that India continues to maintain on the path of fiscal prudence. For example, between subprime crisis in 2008 to COVID crisis in 2021-22, India is the only major economy which has reduced its debt to GDP ratio. Every other country in the world has increased their debt to GDP ratio. We have improved our debt to GDP ratio. There was a worry in the market that this freebies culture could destroy that fiscal prudence. But now there will be confidence and comfort that India will maintain path of fiscal prudence and yet accelerates its growth target.
Nilesh, what do you think then that this policy continuity spells out when it comes to appeal for foreign investors? Do you think that this is only, penciling in or cementing the fact that we will see more inflows into India?
So I think today for foreign investors, it's not the question whether they should be investing in India or not. I don't think so there is any foreign investor who doesn't want to invest in India. The question is at what price we should buy into India. Indian valuation continues to remain at premium to all the peers, be it China, be it Brazil, be it South Africa, be it Indonesia. And clearly their worry is valuation. My only submission to global investors, well, gold will always be available at the price of gold, and copper will always be available at the price of copper. Don't expect India to trade at copper valuation. You have to enter at the current valuation.
Sure, but Nilesh, what is it spelling into, or what would it equate into? And leave the FI investor out for a while. Just the domestic churn which we've seen take place in the market, or the texture of the market right now, where some of the blue chips have underperformed and lagged, not quite participated in the rally as the mid and the small cap end of the market has done. Do you see a continuation of that trend? PSUs, defense, select banks, they continue to hold out? Or do you think now the lagging large caps will see a churn and they will make a comeback?
So the only worry for Indian market is that there is a segment of market, especially in stocks where floating stock is limited and is controlled by few investors. In those stocks, courtesy low floating stock, valuations have risen way above average. And that segment could be vulnerable. Now, it's always difficult to predict when the bubble will bust. And it is not yet even a bubble. My feeling is that there will be divestment in the next term. That supply will ensure that there is more floating stock in the market. And then valuations from being unreasonable will become reasonable. So if not in next 2-3 months, definitely over next 6 to 12 months, we will see low floating stock where supply emerges getting corrected on valuation. From a valuation point of view, there was selling by FPIs in large scale names. There was profit booking by domestic investors in large cap names. Now valuations are in favor of large caps. Hopefully over next 12-18 months, they should outperform or give similar performance as small and mid cap.
And just in terms of, sectors that you see benefiting the most from the outcome of the polls, would it be the more capex-oriented sectors, cyclical stocks perhaps benefiting?
So I don't think so. There is going to be any material policy change in next 6 months which can impact market from the state election outcomes. But undoubtedly, the focus of this government has been on infrastructure creation. This year, we will be crossing 10 lakh crore in capex for the first time. The infrastructure sector will continue to benefit ahead of general election as government pushes infrastructure sector. We will also see consumption sector benefiting as generally ahead of election, government puts money in the pockets of consumers. So infrastructure and consumer could be a play for general election 2024.
All right, Nilesh bhai, really appreciate your time. So glad you could join us. From a market standpoint, we are looking at a rip-roaring start. 270 points is what the GIFT Nifty is indicating. We're likely to open at a level where we've not seen that level on the Nifty per se. And even after today's appreciation, which is about 1.5%, you actually are still up 12-13% for the year. So frankly, this market in large cap stocks is still not looking very expensive. And that is the point which we've been trying to say. We've been talking about this rally, Happy Diwali rally to a Santa Claus rally. That's happened and it will clearly extend itself. The differentiating factor is that in the month of November, when markets have rallied, there has been a very strong undertone of global currents. From weakness from emerging market equities to gold, from decline in bond yields to weakness in even in the dollar index, everything has been favorable for emerging markets. But now are we likely to inch out a bout of local outperformance? And that really may be the case post on the election verdict. And that is something which I think is worth revisiting again and again, that a bout of local outperformance is coming. Shashank Srivastava, Senior Executive Officer, Marketing and Sales with Maruti joins us. Shashank, good morning. Thank you for joining us. Your month-on-month sales have declined by 20% in November. What has led to that, and is this a one-off?
Yeah, so I think when you are saying month-on-month, you're comparing November figures with October ones. October, remember, was a record month. 391,000 vehicles in the industry. And there was obviously a build-up to the festive season. because in the month of November, in the first fortnight, we had the Diwali, the Dhanteras, the Bhai Dooj. So obviously there was some build-up of stocks by the dealers in anticipation of good retails in the first fortnight of November. So that does not exist for December, because December everybody would like to carry lower stocks and try to reduce as much as inventory as possible for the previous year's model year. So I think if you look at November on its own, it's the highest ever sales for November in the passenger vehicle industry. So I think it's been very positive. Going forward though, because the stock levels are at slightly elevated levels, I would expect December wholesales to be down, and then Q4 onwards should be, again, given the current levels of indicators of bookings and inquiries, I think it should be okay.
Right. Shashank, inventory at all-time high levels. Would you like to stick to your previous view that, they're still not at alarming levels? And if not, then what gives you the confidence to say so?
Yeah, so when we had this interaction, I think on the first week of November, obviously the inventory levels were expected to fall because of the better retails in the first fortnight because of the festive season. That has happened. However, subsequently, we have seen wholesales from OEMs, and the inventory level is, although a little corrected, but still in that high range of 330,000, which is roughly about 30 days of stock. Now, there's a difference between these stock levels, even if you're at similar levels on 1st of December versus 1st of November. So in November, you expect retails to be, it's a build-up to the festive season, but in terms of 1st December, obviously you would like to go down from this level of stocks, and that is why I'm saying that you would see higher levels of push from OEMs and the dealers to reduce stocks in December. It's not a very unusual phenomena, but obviously we will have to retail a large number of vehicles in December so that the stock at the December end comes to a very safe and low level.
Given the price hike planned in Jan, what are the expectations for December sales, especially for entry-level cars? Where will the discounts go?
Yes, so I think, as I just mentioned, everybody would like to keep stocks low at the end of December. That means the wholesale should not be large in the month of December from the OEM side, and also a big push in retails for the month of December. And that means that for some models where the stock levels are skewed towards the higher side, maybe let's say about 40 days of inventory or 45 days of inventory, those models will see a higher retail push. And I would expect, therefore, that the discount levels in those models will go up. But of course, it really varies from geography to geography and dealer to dealer, the stock levels. And one of the critical factors for discounting to go up or down is how much is the supply with respect to demand. So I would again reiterate my earlier thought, which is you would see elevated levels of discount. It's not just about small cars, although I think those cars are under larger stress, and therefore it is expected discount levels will continue to be high in this segment. But then it would be across, and I would say that every model stock at the end of December should be low from the perspective of dealers as well as from the OEMs.
Shashank, great to have you today on the show. Thanks for highlighting what your reading and takeaway has been from the monthly auto sales numbers. Kunal, within the PSU pack, which I'm sure is going to also see a significant bump up, in addition to the mighty rally that's already played out. Last week it was not just IREDA, the new listing, PFC, REC, NTPC, some of the OMCs which held out very smartly. Any trend that you pick up within the PSU pack?
So yeah, a lot of names, for example, the likes of REC, PFC, they've done exceptionally well. I think in the last 1 week also the stock were up more than 15 odd percent, 14 to 15 odd percent, and then compared to this the last 1 year, it's been a spectacular year for these stocks. What I like about the other set of names, for example, you flagged off BPCL. Yes, there has been a phenomenal uptrend as well as a breakout for many of the UMC names. So the three stocks, which of course fall in terms of the price performance, BPCL is one of the highest performer in the last 3 months. The stock has gained, I think if I'm not wrong, around 35% approximately. And then IOC is the third one, which has fallen or which has risen the least, I think 20% odd plus for the stock in that kind of a time frame. Then there are other set of names, for example, the likes of BHEL. I think that stock has done exceptionally well from, I think, 100 odd levels to now 170 plus where the stock is trading. So there are phenomenal kind of stocks from the PSU front which looks attractive. I would still be bullish on BHEL from current levels. NMDC is another name which I would be bullish on even from current levels.
Let's spend a minute on OMCs, and I would stick my neck out and say that, guys, defense has got re-rated. PSU banks have done their bit. They've gone through a cyclical uptrend, and now they are pretty much aligning to the reality. Then you've got railways, which already is in a strong groove. Railway power has already done well, which is one space where participation has just picked up and valuations are still in single digit. That's the PSU space. Now the problem with the PSU space is, or PSU oil marketing companies, is that every time crude prices have gone up, some of the government policy has not really followed the true spirit of oil deregulation, which is that ahead of state elections, when oil prices have gone higher, oil marketing companies had to bear the burden. Every time oil prices have come down, the states in a sense have not really followed a standard procedure of changing the duty tax structure. Now the assumption from the market really could be that with more and more BJP states now coming under their fold, and large states, we are talking about Chhattisgarh, Madhya Pradesh, Rajasthan, Uttar Pradesh, Maharashtra to some extent. So you add up all these large states, and if there is a unified policy which is likely to be followed by these large states when it comes to a oil tax regime, then could it lead to re-rating of some of these stocks, oil marketing companies largely? So if you frankly ask me that where is one deep value left in the market where you want to start thinking contra and there could be a rub-off effect of the election cycle in the next 6 to 8 months, I guess it could be oil marketing companies. But I want to remind our viewers one simple data point. We started the show with that, which is that I think we are now reaching that point of substantial amount of local outperformance. In the run-up to the election, markets have always rallied. That's been the experience of 2009, 14 and 19. 2004, of course, was the odd one out, but post that markets also fell. So 2009, 2014, 2019 and even 99, Asha, I mean, this is like a fantastic data, 20-year-old data. Yeah. It just tells you that history always repeats itself in some form or the other. The quantum may be different, but the direction each time has been different. So if you look at the lowest denominated factor, which is, let's say, 2004, right? It is that kind of in positioning you had in 2003. BJP that time was the ruling party, and they won all the state elections. Markets were convinced that they were coming back, yet market rallied. Yeah. If that same template is to be played out, are we in for a rally? B, for large cap stocks, valuations are not stretched. If there is one deep value pocket in the market, it is actually in some of the large cap names. So this graphic actually, if you look at 6 months from now into May, let's say till May, I will not be surprised that a marked outperformance is around the corner. Sanjeev Basin joins us now. Good morning.
Good morning, Nikunj. Good morning.
अरे आवाज में गर्माहट होनी चाहिए. 200 पॉइंट निफ्टी ऊपर है. Good morning again.
अरे very good morning, sir. Very good morning.
थोड़ा और 200-250 पॉइंट निफ्टी ऊपर है.
अरे 250 पॉइंट क्या सर, 500 पॉइंट 21,000 आ रहा है. 21,000 सगन का नंबर है. 21,000 आ रहा है. आने दो बाहर वालों को. आपको तो अपना माल लेना है, और माल अगर है, if you have been following ET now, you have been bullish and staying put in the month of October last week, and we had told you new highs are coming, and everyone was thinking it's a joke. Look at the valuation, look at the price. So it is all about, Nikunj, staying invested, following the mantra of correct discipline, and enjoying the times. So early Christmas is here. Very good morning to you, Aisha and Awan.
21,000 in the month of December. अब तो बुर नहीं लगता है, right? I mean, what looked like a very tall, high watermark, now after today's opening will actually be 700-800 points away.
Nikunj, the foreigners are underinvested, or rather short. And when the fools were selling, you should have bought. Now the fools will buy with full vernum. So when they take you closer to 21,000, sell all your leverage position and go on an early holiday. Because this is the time you will see euphoria. India's outperformance on macros was evident. Now the Fed is on a clear path that there will be a rate cut in the first, maybe January, maybe February. Dollar is very, very weak as gold is rallying. Bitcoin has hit 40,000. Why shouldn't the dollar be at 95? And fourthly, India's whole economic scenario is arguably at the best and gets a further leg up that there will be no, freebies announced on oil and others. So PSUs will again start to rally. And the larger market, the Nifty, is very, very comfortably placed. If I can put my money on anything, it is the index.
Yeah, and Sanjeev, I guess that would also make the case stronger for these lagging large caps to finally begin participating. I mean, everything from an HDFC Bank to Reliance to Infosys to ICICI Bank, even ITC, year to date, they've been underperforming.
Good morning. Correct, Aisha. And that is what it will be, because large caps will see buying since there is more easier entry and exit. And secondly, there is valuation comfort. Thirdly, when foreigners generally buy or ETF flows, it's the index. And like you said, the index has done nothing. So we are, used to those 20% upsides in the BHELs coming in the week or HBCL. It may not be that way now. It will be more of a, construed buying into the index. So if I can be anything bullish, it is the Nifty and the Bank Nifty. Concentrate on that, and there is still room on the upside in both those indices, which include the like of HDFC, Reliance, or a stock which we have been doing a SIP, Kotak Bank and ICICI, which I think can be the next leg up. Also look at some of the communication stocks, which I think can be huge outperformers after the recent correction. And I will name a few if you want, which I think can be huge large caps, which can outperform.
Nuresh, Kunal, Sanjeev, I'm going to ask this question to all three of you. I'm going to start with you, Nuresh, but the question remains the same. I'll encourage all three of you to respond to this one. Is it time to shift 15-20% of your allocation from mid and small cap stock to large cap? Nuresh?
No, I would continue to remain stock specific and not go towards large caps. Keep continuing the same allocation as you were, say, yesterday.
Well, yeah, I think it makes sense to shift from mid caps and small caps towards large caps. That's what I would believe that the next leg of beta as well as price performance could be.
Bhasin Saab, same point. Time to shift 15-20% allocation from small and mid cap to large cap post the election verdict?
Not 15, 20, 25 to 30%. 100%. Take money off the table. There is room on the upside in Kotak Bank and the whole banking scenario on the communication side and on the large cap. If Nikunj, there is profit booking, it will come in mid caps because there is been froth over there, and it's always good to leave something on the table. Let the next person make money. If you have made good money, that's the time you should encash your profit. I am very, very confident on the large caps, and I think their underperformance will now come to the shelf. Plus, if you have large inflows from foreigners, it will be always on the index stocks firstly.
Okay, fair enough. Let's also get your take then, Sanjeev, as to what your outlook is on Honasa or, the parent company of Mama Earth. Brokerages are alluding to the fact that, yes, it is a new business and it will take time for the offline strategy to really emerge. There's been lots of news flow and the stock has skyrocketed and then come off those levels, but still at 400, what's your view?
So, Avan, like I said previously also, we are not chasing this stock. We will wait for more color. You've seen both them and Nykaa be in a space which has been relatively an outperforming over the period of time. It underperformed for a large part. But I would still go with, my top holding is PB Fintech. By the way, it hit a 52-week high. I'm very bullish on Zomato and Paytm and those three names. If I had to buy something on this QSR or the whole space, I would still put my money on Devyani. It's a proven brand. It's had a huge track record. They're expanding into more stores. So I would give Honasa a miss. I am not chasing that stock. I will wait for more on the numbers. This quarterly numbers may have been one-off because of their new listing and so on. I would rather chase Devyani, Paytm, PB Fintech, which as a disclosure is one of our top fintech holding.
Is Purinju ready? Can we connect with him? He's getting ready. He's told his dealers that he will be joining late because he's got an interview on ET now. So it doesn't matter. He's just getting ready there. So Bhasin Saab, एक stock tip?
तो निकुंज जी मैंने पहले भी कहा SW Solar, their clarification has come. They've cleared all the past debt, and Shapurji Palonji, which defaulted on 418 crore, was the previous promoter and had an indemnity. They've cleared that. You are looking at a business which has an 18 crore equity. It has a 350 crore fixed cost. Nigeria government is signing a $2.2 billion order over the next 3 years. There has been not a single rupee order from the parent, is Reliance Energy, which is talking of 35 gigawatts. This stock is a doubler from here till next July, next Diwali, maybe earlier. And I can put my money where my mouth is. We have a huge investment as a disclosure on a personal front, on my client's front. And I think this stock is a doubler. Don't look for quarterly numbers. Bad news is already there. 1,000 crore debt, they are trying to reduce that by doing a QIP. So if I had to put my money, it is on SW Solar, Devyani on the cash side. I am very bullish on Tata Communication. I think for them, the unified communication, cyber security, cloud computing, all that is performing brilliantly. If there is one name which you should have in the Tata tech portfolio and the communication, it is Tata Communication. I don't rule out 2,000 rupees coming in this stock over the next 6 months.
Okay. All right. Well, you know, I always get excited when my dear old friend Prunju Vela joins us now, and you know, the guest team has managed to convince him to join early in the morning. So Prunju, I'm sure after election verdict yesterday, abhi to party khatam hi nahi hogi. Are you joining us straight from the party?
Yeah, good morning, Nikunj. It's, I think, it's a lot of relief for the market. You know, many people have been little skeptical, or some people were worried about the general elections in 2024. I think that worries are over by the state election results. The trend is still very strong towards the ruling regime. In any case, it's very important, you know, we all are investors, or very watchfully we are looking at the economy of the nation. So it's having a very stable politics and strong leader, and I would say committed team on political front. These things are very important at this stage, at the current stage of our economic growth, and you know the way nation is moving ahead. So that way, I think it's a lot of comfort is I think to the investing community and the patriotic citizens who understand the importance of a higher rate of growth and leading India into the forefront. It's already happening of the global economy.
Okay. Now, Prunju, our audience and our viewers would like to understand from you that historically markets have always rallied in the run-up to the central election. That's the data which in a sense is evident from last 4 election cycles. We're looking at last 20 years. Do you think this time it's going to be no different? We are in for maybe a 8 to 10% rally from December to May?
Definitely, Nikunj. Some 8% or 10% rally in Nifty and Sensex. It's not a big thing, to be very frank. More important, now all investors are looking towards, you know, at least we had a tremendous rally, which has gone much beyond the Sensex and Nifty. If you see the number of smaller companies in mid caps and small caps in India, they are also very important part of the economy and the market. And their valuation gap was very huge. Now in the last 3 years, this valuation gap between the small caps, mid caps and the large caps, that valuation gap has come down. So there is no excitement overall. Investors are more worried about, you know, whether we can sustain this 3 years bull market, what has been happening. It is definitely unprecedented bull market. There is no doubt about it, because it is sustaining. Earlier also we used to have such sharp movement in 92, Ashad Mehta time, or the late 90s, or all those things. But this time it has been a sustainable bull market. Many at times people thought markets will crash and crash. A lot of people were there talking like that, but it never happened. It has been giving corrections occasionally, and that's a very much part of this. Otherwise, I think markets have been very different. See, it is supported by Indian economy outlook and the growth. India presents an unparalleled long-term opportunity for equity investors today. That conviction is what is making the money flow into the market. We have such numerous structural trends, such as, you know, young demographics or massive infrastructure built up, digitization, formalization of the economy, growing financial inclusion, you know, an alternative sourcing hub India is becoming for the global industries. And it's all combined with the ongoing huge historic reforms. So India is in a fantastic position. It's a compelling long-term market for the global community, global investing community. It will continue. We will continue to be, but don't expect any big rally in the Sensex and Nifty till the elections. That kind of thing, I don't know, to be frank. But a 8-10% rally is very simple. It's not. It doesn't take time. Also, it can happen in few weeks' time.
Nikunj, in the overall scheme of things, how you look at your portfolio post the election verdict and in the run-up to the election cycle, the central election cycle, could you be looking at some tactical changes? Maybe go overweight on defense more, maybe go overweight on railways more, because if this is a vote for continuation, then defense, railways come back in PSUs. That trade may just extend itself. Pranju?
Yes. Nikunj, it's a very, very important question and important point to be thought. That defense, railways, that kind of make in India strategies by the current regime, it will now continue. It's almost sure. So that is going to create a lot of wealth in that segment for investing community. So some of those stocks we may feel is overpriced. The way a Mastercard stock moved from 180 to such kind of multi-bagger levels. So it may give time-wise correction. Nothing cannot move so much, continue to move without fundamental numbers supporting. Those numbers are going to come. We all know. But that is why there could be time-wise correction. But otherwise, these segments, government is very serious about it. They are doing the right things. And in these PSUs, they are doing many acts, to reduce corruption by the bureaucrats and, make it like a private company, Jaisa. They want to make it efficient. So that process is on. There may be some disinvestment on the way up. So I think that segment is going to create much more wealth, maybe after a time correction in general, but there could be stocks which are still undervalued in PSUs. I feel those some of the state PSUs like GNFC, GSFC kind of stocks under Gujarat government. There are a few companies which are listed and which have been traded in the market for last many decades. Some of them are great value, and because they are government controlled, there could be corruption. They are not as efficiently profit motive. Those kind of apprehensions could be there in the investor's mind. That is slowly moving away, and government is doing the right thing. The best possible way they are managing these PSUs.
Fair enough. I just wanted to understand from your standpoint as well. Let's also introduce Saurabh Mukherjee, who's joining in on the show. Saurabh, good to have you on board. Given the fact that a lot of brokerages are saying that now with this political victory, a decisive victory for the BJP, it allays a lot of market concerns when it comes to political risks. How exactly do you think the markets are going to price this in, and what is the outlook down the line?
I mean, look, we've been talking to several foreign investors over the last 3 months, trying to persuade them to invest. And they clearly were worried about political stability. I think more than the domestic investors, foreign investor who will take a lot of comfort from the assembly election results. And my reckoning is over the next 12 months, the FII will become a big force in the Indian market. Combine that with the fact that we're at the top of the global rate cycle. As rates turn southwards, as the 2024 election beckons, I think FII money will roar into the Indian market, and therefore positioning yourself in stocks which FIIs like to buy, like the large private sector banks, like private sector industrial plays, I think will become a recipe for success. So big swing factor, I think, in favor of FIIs. They were apprehensive about 2024. They will take a lot of comfort from the results.
So Saurabh, it's a judgment call whether they come now or they come after May or they come in Feb. But कहाँ जाएंगे FIs? आना ही पड़ेगा वापस.
Yeah, I think कहाँ जाएंगे wala point is bang on. The reason I'm saying is they're taking a lot of confidence. I received phone calls over the last 12 hours about planes being booked by FIIs, trips being planned through December. So the trips that were being planned for, say, June, July have been preponed to December. And the FII from various investors from all over the world will descend upon India over the next, I think, month or so. In fact, over the next 2 weeks or so as they load up on India. So there's a preponement of roughly 6 months in their purchasing. And as I said, it happily coincides with the top of the global interest rate cycle.
Okay. Saurabh, this is just for the benefit of this audience, those who are watching the show. Do you think it's time now to really switch tracks? Maybe take 15-20% of your allocation from mid and small cap compulsory out and move into large cap. So don't go overweight, don't raise cash, but time to switch tracks or change gear?
I would say, I think the bubble in small caps has been evident for 12 months now. Now, how long will that bubble sustain? I have no idea. In contrast, sorts of large caps we invest in, and we've discussed on your show, Nikunj, several times, HDFC Bank. We've also discussed the broader private sector banking pack and how it's been outperformed by PSUs and by small caps. I think there's plenty of value in high quality large caps. They haven't performed in the last couple of years. Earnings growth has been stellar, 20-25% for big stocks. Companies with market caps of $40, $50, $60 billion, running out 25% earnings growth is not the par in any other country in the world. That's where I think the value lies in the market. And I think that's the place the FII will attack. If I was a domestic investor, given what's happened in small caps over the last couple of years, I would rotate some of my investments from small to large cap.
I wonder how you're looking at some of the capex related themes, Purinju, in light of the fact that now there is a lot more, Saurabh, in light of the fact that now there is a lot more surety. Do you think that this is a sector that could perhaps emerge as a place where maybe foreign institutional investors will flock to, or an interesting area that you believe merits attention?
So I think the really, really interesting piece about these election results, right, is I think the impact it will have on private sector capex. Now, why am I distinguishing between private and public sector capex? If you look at the capex data, government capex has more than doubled from the FY19 level. So pre-COVID to now, government capex in fact is up 150%. Private sector capex is marginally above the FY19 level, right? The private sector capex actually hasn't grown that much in the last 4 years. The 4-year CAGR on private sector capex will be barely 2-3%. That's the piece which I think now revs into high gear. And I think the capex plays that will do well over the next couple of years are less PSU oriented, less around things like defense and railways and roads, which have done extremely well over the last 3 years. And I think now we swing towards private sector capex plays with the genset manufacturers, the private sector banks, and Axis Bank, ICICI Bank, the banks will sustain the capex story in India. And I think that's the big theme shift we will see in the capex story, away from public towards private, as in India Inc. presses the capex button, given that they now have political stability.
Saurabh, what's the outlook then as well when it comes to the overall inflationary concerns for sectors that are consumption related, the entire rural theme as well? Do you think that, given the fact that corporates as well said that the festive season hasn't been quite as promising, that we are looking at maybe prolonged slowdown in consumption related space?
So I think it's a fair point you raise. I think it's noticeable that post-COVID, the low-income consumption plays have been subdued. As we all know, FMCG volume growth struggles to get beyond 3% in India these days. I think what's becoming more apparent is that spilling over into even middle-class consumption. The latest capex print, the latest GDP prints, where consumption grew at just 3%, I think is indicative that it's spilling over to middle-class consumption. And remember, this is at a time when private sector financial savings are at a 40-year low. So even with low savings, I think the middle-class piece is struggling. For this to recover, we'll need the job creation story. I think especially IT will have to fire back. Now, when does the IT services job creation story revive? I don't have an easy handle on that. But my reading is that consumption as a theme, I think will take especially middle-class consumption as a theme, will take a bit of a backseat to the private sector banks and to the broader private sector capex story.
All right, Saurabh, good to have you on board. Thank you, as always, for giving us a sense and giving us an outlook as to what you make of the election outcome. Thank you so much, Purinju, as well, for joining in on the show. All right, let's slip into a very quick break. We'll come right back and focus a lot more on stock-specific ideas.
Well, look at the pre-open rates on the index. 20,600. We're looking at a move of about almost 350 points on the index, and this is just what the pre-open rates are indicating right now. 1,000-point move, no less, for the Sensex as well. And, this is just at an index level. What's going to happen to some of these individual stocks? We're yet to see that once the market open kicks in. But on that note, let's also gear up. What is it that you should be doing for the best performing segment in the market up until now, the mid and small caps? And let's get in some mid cap trading ideas. Kunal, what's on your list?
So there'll be a buy on NMDC. That's a stock which, as we were discussing earlier, looks attractive from a breakout front at 180 approximately for the stock. Would look out for a buy, targets closer to 190 and stop us at 179.
Right. Naresh, what about your mid cap strategies?
So that would be a buy on NHPC, the stock, after consolidating for a really long time after the initial breakout back in July, has finally made a new 52-week high and an all-time high. Good volumes, one of the highest volumes in the last 2 months. This breakout should ideally take it towards 65 mark in the short term, stop loss at 55.
You know who better than Swaminathan Iyer, the consulting editor at ET Now, to analyze what this sweeping state election win for the BJP would mean for the markets. We interacted with him just a short while back. Here's a slice of that interaction.
I would say that global investors are not particularly interested in the state elections. They look at the larger picture. I think they've already assumed that Mr. Modi is going to win in 2024. This is some confirmation of what they were going to do, but I don't think it changes their view that Modi is going to win in 2024. And he wins by another 10 votes or another 10 less votes, I don't think is the key thing. But yes, the markets like continuity. Particularly, I think they would have been worried if there was a Congress sweep. Then I think something like the Adani shares might have had a question mark against them. Because of certain fears. But as it happens, so there's continuity. It has to be said that the FIIs have not been all that keen on India. It's not that money has poured into India the whole year. But the global outlook as such appears to be not as bad as earlier thought. The US economy appears to have had a soft landing. They raised the interest rates, and yet they have brought down inflation without having a recession. Quite rare. Doesn't happen very often. But the US economy, having achieved a soft landing, it's roaring ahead with unemployment as low as 3.9%. In those conditions, I think they will begin to have a more upbeat thing on the whole world economy, where, of course, India is now seen as a new kind of locomotive taking the place of China. Still not comparable to what China used to be, but I would certainly expect significant flows to be coming in 2024.
Right. And, Swami, I think the policy continuity, what's happening on ground, whether FDI participation comes back, whether FIIs come back or not, just domestically, the market is going to be charged up, be it what's happening on ground with infrastructure, construction, all the development around India's work on renewable energy, etc. That momentum in itself is good enough.
Yeah, I would say from the point of view of, I can understand Indian investors getting a little more charged up with this, but the foreign investors have already built in the notion that Modi is getting re-elected in 2024. That being the case, they don't really see that the state election would have changed things very much. Even if the BJP had done somewhat worse and lost a state or two, I don't think for a minute they believe that Modi will not return very, very solidly. That's why I thought that, foreign markets may not get charged up by this news. It's already built into their expectations.
I wanted to understand your take as well now with this outcome in terms of the fact that we've already seen some populist measures announced. Do you see potentially some more coming in the run-up to May? And how are you seeing this impacting the overall fiscal consolidation picture?
No, I would say that the important thing that has happened is the global conditions. I would say the US soft landing is a very big positive for the markets. And once you get that optimism, it spreads. There were considerable fear that 2023 is going to be a bad year. There were people who feared a hard landing and a recession in the USA. There were people who feared a lot of carnage in some European markets. The impact of Ukraine was unknown. It was a question mark. So I would say many of those things have gone. It's very clear the US had a successful soft landing. So when you see the conditions of, it looks like 4% GDP growth this year, which is far above what expectations used to be, with the prospect of continuing further. The labor market is red hot with 3.9% unemployment, and there has been a rise in wages, but it has not translated into high inflation, which is a very positive sign. So I would say these are the conditions that would drive the optimism of the markets. What's happened in India would be a small investor. I mean, some India's specific funds may think, well, it's slightly better than before. But yet I would say they already have assumed, all of them have assumed continuity, all of them have assumed that Mr. Modi will be re-elected. That is why I don't think these state elections would make very much difference, especially when Mr. Modi has won quite well anyway.
Sir, purely from a market standpoint, if I say that the real setup based on the outcome of the state election is following that this time it's not going to be Kashmir, it is not going to be triple talaq, it's not going to be free toilet, it's not going to be free cylinder, it is going to be simple financial inclusion and economic growth. Do you think that is going to be the real core of 2024 BJP's positioning?
I hope so. I hope that is the case. You never know. I mean, nobody expected the incident of which led to the Balakot bombing. And that Balakot bombing, I think, added, according to my Economic Times poll, 7 percentage points to the BJP's popularity in 2019. I mean, it was such a boon that some people even speculated, was this a managed thing that happened? And will Modi try to manage a similar incident right now? I would say right now, there is no need to get into that kind of thing. There is no need to up the ante with Pakistan on the border on any of these issues. There is no need to up the ante on the Sikh Khalistani issue either, despite what we have seen in the USA and Canada. I think the BJP believes that its performance has been good and it can win on the basis of performance.
All right, now you want to look at some Adani group of stocks, just as a rub-off effect, some PSU stocks, and then defense, especially defense and railways, just to classify within PSUs. First, Adani group of stocks, I mean, it's going to be just, you can say the word magic, and that's what you'll see on the screen at 9:15 today. Just a lot of green, I mean, you thought that Tata Tech was magic and IDA listing was classic. Well, these are, I mean, today we are looking at a real, real party for the bulls, so to speak. Head over heels kind of a, market today. Let's look at Adani group of stocks in the pre-open rates, in the pre-open session, please. 27 seconds to go. And 20 seconds to go. That's the setup for you, small cap, mid cap and Nifty. The Sensex is all set for a grand open, which I think is very important. Now, I'm just going to let the screen do all the talking, because when the GIFT Nifty is telling you for a 300-point uptake, needless to say that everything is going to be a rising tide phenomenon. So the data of Friday is not relevant. What happens today, I think, is going to be important. All right, what do we have? We have full house. This is, whoa, 70. Look at the advanced decline ratio. Look at the surge on the Nifty, and a market which was really large cap stocks which were lazy and they were in hibernation. I think the tortoise, which we call them, the tortoise has become a bull, and they've started walking at the pace of a rabbit today. So large caps is where all the action and excitement is. Blink of an eye and it's just magic. New high, and it's a new high which has been made on style, and you've made a new high which now is way past the previous high, which means that there is going to be a huge gap up start, and then let's say what happens after that. Second, banks. Banks is where the turn is evident. Large cap private banks across the board are in some kind of a I mean, it's a great start for them. Now let's look at Adani Group of stocks, please, one by one. Adani Enterprises, Adani Ports, a whole host of Adani Group of names, and all of them are up anywhere between 5 to 10%. That's where the excitement and action is. Now let's look at defense, railways, construction, PSUs largely, because that's the exciting space, and that's where I guess the binary risk of a 2024 election cycle has got completely diluted. So that's where I think the excitement is going to be captured. HAL, it's a tick there. Look at, we'll have to change the graphics perhaps slightly more quickly because a lot of rates are changing and a lot of exciting things are happening. Just pardon me, the all is just getting slightly lazy because so much of price change today is just having an effect. BEL, BHEL, Kochi Shipyard, Mazgaon Shipyard, all the anything and everything which is in the railways and which is in the defense space, I think is really going, is off to a great start. Aisha?
Yeah, it is. You pick up any stock within the PSU pack. I mean, forget just defense and railways. Across the board, you are seeing a whole lot of green really built in on these names. But let's also focus on what the large caps are doing. Of course, I can see Adani Enterprises, Adani Ports, and I think for Adani Ports, the cargo volumes for the month gone by did post a handsome uptick. So there's that further fillip in terms of news flow as well for Adani Ports. But HDFC Bank, Reliance Industries, ICICI Bank, Infosys and ITC, the large cap underperformers, they also are moving up, which is why you're seeing a bigger meteor move on the index. So it was a 1.5% move coming in for HDFC Bank, or nearly 2% actually, 1.5% up in the green for Reliance, and then ICICI Bank also over a 2% move is what that stock is currently seeing in trade. So in tandem with the rest of the market, these cases are not really, standing solo in the queue. They're all on the green side right now. Let's address some newsmakers as well while we're at it. Hero MotoCorp, the total November sales saw an uptick of about 20.6% on an overall basis. The domestic sales have risen about 25.4%, 2% higher for Hero MotoCorp, which has been the most charged up along the stocks in this series gone by. Eicher Motors as well, Royal Enfield sales have seen an uptick of 13%, exports uptick of about 2%. That's looking strong. There's of course Tata Power. They're looking at acquiring Bikaner-Nimrana transmission project. The estimated cost is around 1,500 odd crore rupees. Tata Power holding up 2% as we speak right now. I want to now address what's happening within the entire newly listed universe. What is Tata Technologies doing? IREDA, Gandhar Oil. What are these new debutants from the week gone by up to? Tata Tech finally seeing some signs of a crack build in. That stock is down 4.5%. IREDA is currently higher by 3% as we speak right now. So good start. A lot of expected lines. Kunal, what's your first reading?
Yeah, I think it's a very good start again for the index. We are above that 20,500 mark, which is again a good psychological hurdle and should also probably fuel more put writing onto the index. So hopefully that 20,500 mark, if we sustain about those levels for the first hour or so, then I believe that we could see a stronger put writing that could act as a base for the index going forward. In terms of the opening trade, Tata Motors is something which looks attractive and would be keen to buy the stock even at current levels of 700 plus.
All right, let's get in your take then. And you've got all Nifty 50 stocks, Naresh, that are in the green. Adani stocks leading the way. Anything particular that's catching your eye on this stellar Monday morning? And run us through your first trade.
So overall, the whole market looks interesting given the breakout move. Would be waiting out for a dip on ICICI Bank in the day to buy. Like the stock, that could be the one which could actually lead and go towards the new all-time high quickly.